You are on the Suze Orman Show.
Hi, Susie.
Hi, Kelly. What's up?
About 12 years ago, me and my husband purchased a universal life insurance policy to help pay for my son who's going to college in 2 years. And I'm concerned about the amount that we contribute every month and if we're going to have enough to pay for school. And also, was it a good investment since it's not an insured account?
How long have you been watching the Suze Orman Show?
A while.
A while, and how many times? How many times have you heard me say I hate universal life in the majority of the cases?
Yes.
A lot. All right. Let's just let the numbers speak for themselves, girlfriend. Okay? You put in how much per month?
Total $463.
A month?
Yes.
All right, so just let's say it's $400 a month. We'll make it easy for the math. That's $4,800 a year, correct?
Yes.
So over 10 years, that's $48,000. How long have you been doing this for?
Probably about 12 years.
So $58,000. Let's just say $60,000 in there. You put $60,000 in there. What is the cash value of the policy today? Not the accumulated value, the cash value when you start to withdraw it.
About $40,000.
All right. Is that a good investment? You put in $60,000 and you're going to take it out. You have $40,000. You have lost $20,000. I'm going to say this once. I'm going to say it for the rest of my life. Here's what you have to get. Insurance needs to be insurance. Investments need to be investments. You should never combine the two. Ever, ever, ever. I just have to address Kelly's call that she just said for 12 years she's been putting money into this universal life insurance policy. Really, she should have $80,000, $100,000 in there, and she has, what, 40. Here's what I want you to understand. Do you think when I sit here and I'm talking about how in most cases I don't like universal, variable, or whole life insurance that I'm not talking to you? I am talking to you, but you don't have to believe me. Just do me a favor. If you have one of those policies and you purchased one of those policies as an investment, it's a great way to invest your money as well as provide yourself with insurance. Don't take my word for it. Get out your paperwork. Look at how much money you have invested. And do me a favor. Go to one of those compound calculators that happen to be online. And start with, you put in $460 a month. And you did so every single month for 12 years. Even at just 4%, what would that be? That'd be like $85,000. So do your own numbers. And then take a look at what your cash value is, not the accumulated value, because that means nothing. What would you get if you cashed it out? And you will see that you have probably 50% less than you should have had if you just invested that money at a simple 4% annual average rate of return, which isn't that great. People got it? So can you just really check it out and stop wasting money?